Today is November 18th. It's 9:21 a.m. This is the daily chart for Alibaba Group, ticker symbol BABA. And as of yesterday's close, it closed at $161.58. Now, the stock market's going to open in about 9 minutes. And this is just a follow-up review. My initial review was back in October, and in that recording, I identified the support and resistance levels. And also in that recording, I indicated that this gray box was an area of interest because I was anticipating either a break towards the upside or a break towards the downside because of this falling wedge pattern right here. And so what I did was, when I was looking at the stock yesterday, I wasn't aware that they were reporting its quarterly earnings pre-market today. And as right here on the Market Watch calendar, right here, BABA is scheduled to report their quarterly earnings before the market opens, right? So in anticipation to the earnings, as well as this wedge, and as well as news that's out there saying that there's a supply chain issue, warehouses are empty, there's delays in shipping and all of that. I thought all three was a combination for a downside move. So prior to yesterday's close, I did buy option contracts that expires this Friday, right? So there's only 1 day remaining after today, and these contracts go worthless. So yesterday, I bought 5 contracts of the $150 target price, right? So even though price closed at 161, I was super bearish that I picked a target price of $150. So essentially $10 or $11 move towards the downside. So I did pick up 5 contracts. It's now currently ITM for in the money. So my purchase price was $65 per contract. Yesterday it closed at $64, and since entering the trade I'm down $8. And I bought these contracts. I picked up the first 3 at 330, and then actually they were all 5 were 330. So it's in the money because right now these contracts, they were originally way out of the money, right? Because it was a $10 spread. And since this morning, price has been falling because the earnings just came in, and prior to that. So right now, this is where my contracts are. So the dollar amount's going to get adjusted when the market opens. But going back to the chart, even though the daily chart's not showing the pre-market, if I toggle down to the daily time frame, I mean a lower time frame of 30 minutes, you can see that the sell-off started right here at 6 o'clock this morning. The stock price just started dumping, right? And price closed right here yesterday on this green candlestick, and after market, it just went sideways. But pre-market this morning, I guess everyone's anticipating the same thing that I was, that because of the supply chain issue, that prices just dropped, and it's now trading at 147 right here. So even though this is a great sign for my contracts, so we're now inside 5 minutes before the market opens. So this is a great sign, but I'm just curious to see how the market's going to react. Will bulls buy into this dip? Because this is a huge drop towards, this is between yesterday's close and today's close. That's big move towards the downside. So what I'll do is I'll pause it for now, and I'll pick it up maybe a minute before the market opens. So I'll be back. Okay, so we are inside 1 minute. The market's going to open in 50 seconds. So again, just a refresher, these support resistance levels I identified were back in October. So now that price is approaching the support resistance, I'm wondering whether or not, again, whether the market is going to buy into the dip, right? Thinking that this is undervalued now, maybe they could buy more shares, or will there be continuation towards the downside and blow past this support resistance of 143? So there's 15 seconds and the market's going to open, and let's see what happens. 5 seconds. There's the market, and okay, I just got out of another trade. So price is at 146. I think this is going to take a while to catch up because of the volatility. The price for these contracts lags, and when it adjusts, right, because it's still showing a negative, down $8, even though I'm in the money. My target price is to exit this trade. It's between $365 per contract to $425 per contract. So I bought this at $65. I'm looking to get out between $365 and $425. Because again, these contracts expire tomorrow, and I just don't want to risk losing, whatever gains I incurred from this big move towards the downside. So what I'll do, so price is down $15 since the market opened, and price is now trading at 146. So now it's cooling off a little bit, 14.97. So it's unfortunate I can't sell it just yet because I don't know what the price is, and I don't want to undercut myself. So let's see what happens. In the meantime, I'll pause it for now, and I'll be back. Okay, so price just adjusted. These contracts are now 375. That's my exit price. Even though I think price could still keep dropping, I'm just going to monitor this trade carefully now. So it's a matter of trade management at this point, and price is trading at $3.85 per contract. So I'll be watching this resistance support area of 143. It's $3 away. So again, just to recap, the original purchase price was $65 per contract. I picked up 5 contracts. Overall trade cost me $325, not including commission, and price is it's now over $4. So this is a great start. Hopefully we'll see further continuation as the day pushes through. So maybe we'll see $5. So, all right, I'm just going to pause it again and pick it up in a few minutes. Actually, I'm just going to get out of this. 425. 425, I'm fine with that. $1,500 profit in less than 24 hours. 430. Oop, 435. Profit of $21.75. Sold 435. So that was a good trade. Less than 24 hours, $2,000 profit, maybe $1,800 profit. So yeah, I mean, Even if it continues, blows right past it, I'm okay with that. Because again, these contracts expire tomorrow, so anything could happen, right? So it could bounce off support very quickly, and people would buy, the buyers would buy into it very quickly. And again, because of the volatility, I just want to make sure I got my profits. Didn't want to get too greedy, and until the next trade setup, I'll see you. Today is November 16th, and it's currently 12:47 p.m. Eastern Time. This is the daily chart for Colgate-Palmolive, ticker symbol CL. As of the time of this recording, price is trading at $78.01, and for the session, it's down 28 cents. So I was looking at this chart the other day, and what I did was I identified a low point of $74.20 back on October 25th. And this is based on a 30-day look back. So with this being the low and the high of $78.78 hitting today, I placed a Fibonacci retracement, right, based on these two pivot points, this high and the low. You can see that price, the golden ratio or the Fibonacci sequence is 61.8%. And if there was going to be a pullback, price would be supported at $77.03. Now, with the November 19th option expiration coming up in a few days, I thought that there would be an opportunity for a downside move towards $77. And today was just a strong push towards the downside. And I thought there would be an opportunity to get into a quick scalp leading into the Expiration Friday. So what I did was I purchased the November 19th $77 put contracts. So essentially what I'm saying is that on or before November 19th, I'm anticipating that price will be at or below $77. And so what made me draw that conclusion was I went down to the 1 hour time frame, and we can see that this price level at the 78.6% retracement, price is being supported at this price level here because there's multiple touch points since price got above here around November 9th, and actually even before that. So this was November 5th. So there were attempts to get above 78.60, 78% retracement. And there were rejections over here. Price was supported here, here, right? And now that price is moving towards the end of the week, I'm anticipating that price may continue towards the downside. It may eventually break below this price level, maybe this afternoon or sometime tomorrow. So I thought I'd take a position leading into that initial breakdown. So what I did was I did purchase the $77 puts. Again, here's the expiration, November 19th. These contracts expire in 3 days. I picked up 10 contracts. Each contract represents 100 shares. So essentially I'm holding 1,000 shares for the next 3 days, anticipating that price will drop to $77. My entry price was a little over 18 cents per contract, and it's currently priced at 15 cents. So since entering this trade, I'm down $35. And I started buying into these contracts a little while ago. So my first 7 contracts was at $12.29, and then I had 3 more at $12.45. So that's my 10 right there. Now, this is a very high risk trade because typically when I buy options, I'm buying time with that. So considering that this is a very aggressive trade, the likelihood of this being a successful trade, I would say it's pretty close to 75% break even maybe. Again, but this is an amount that I was willing to risk. The alternative was to short the actual shares itself. So if I was shorting, well, to go back, so if each contract was, I'm just going to round it up to 19 cents, right? And each contract represents 100 shares. So each contract was $19. I picked up 10. So for the 10 contracts, it cost me $190 to control 1,000 shares of Colgate. Now, as I was saying, if I was going to short the actual shares at 70, let's just say $78, right? Times 1,000 shares, the margin requirement would have been 78,000. I could, I could have done it that way, but I thought it would be more efficient, and just to mitigate the risk, I was willing to expose $190 in this trade, but I wasn't willing to risk, $78,000 to hold these shares for 3 days. So that's why I decided to go with the option contracts. So as the trade develops, I'll do another update, and until then, I'll pause it for now, and I'll be back. Today is November 18th. It's 12:13 p.m. and this is the 30-minute chart for Colgate-Palmolive. It's currently trading at $76.44. So as I was anticipating, Clorox did drop below my strike price of $77, and right now price is below the 50% Fibonacci retracement level of $76.49. And as of the time of this recording, my contracts are considered in the money, ITM. So this is a profitable trade, and the trade is now up $500 this morning, and overall I'm up $459 since entering this trade. And current price for the contracts are trading at $65 per contract, or 65 cents. So yeah, considering that these contracts are already in the money, and there's only 1 day remaining, which is tomorrow. Now, considering that it made such a strong push towards the downside, I'm concerned that price may begin working its way back up to cool off a little bit. So I just want to protect my profits. So I'm going to go ahead and close these contracts today. So even though I have 1 day left, I just want to protect these gains. I don't want to get too greedy. I have other stocks I'm looking at, so I'm just going to go ahead and close this out for a good profit of 65 cents per contract. So the overall profit is 640 minus my principal. So let's see if I get filled here. It's dropped to 60 cents. I'm going to take a hit on the $600 now. There, I closed it out at 60 cents. So I took it from $19 to $60. And yeah, that was a nice profitable trade. Again, so in addition with Baba, so between the past 2 days, it's been actually a day and a half of trading these two expiration. It was a good trade. So until the next trading setup I see, I do have some in the works right now, and I'm still reviewing others, so that's why I don't mind getting out of these trades, because I see other setups that are also primed for a potential drop. So until next trade, I'll see you.